Hey everybody, this is Jim at SB500chart.com, trying to regain my voice well enough to do this video. It is about 4:30 on May 28th, 2013. Before we take a look, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look. Okay, starting out on a 30-minute chart, we had this green channel that we've been watching for quite a while, weeks. And here's our lower support line and the resistance line. Interesting. I mean, those lines were almost, not quite, but very, very close to being perfectly parallel. And that lower line gave way on starting with Wednesday of last week with follow-through early Thursday, a little rally, then more weakness on Friday. And then today, we start the day off really with this pretty impressive positive candle, but look where it went. And then look what happened afterwards. So, this line is once again validated. But in the practical sense, it's very difficult still to get a clear sense of direction for where the market wants to go. And this is why. When you break a rising channel, or when you break any kind of channel, rising or descending, doesn't matter. You break for one of two reasons. You break either to set up a reversal, in which case we would be looking for the market to establish a downward leg. But even that is not as sufficient as a pattern that will tell you that this is a top. And I'll give you an example. Let's back out to a 1-hour chart. You can see the S&P had been rising, and we had this our yellow line here that we were watching as support. That line broke, but it didn't break to reverse. Now, I'll be honest with you. At the time, I thought it was the perfect thing to set up a reversal. Okay, it looked to me like we were a little bit more than halfway of setting up a complex head and shoulders with this 1540 neckline. But I don't get my way, and probably there aren't enough people listening to what I say to where it would amount to a hill of beans anyway. And even the people who have a wide audience, they talk and they get it wrong all the time. But since we knew to watch this 1540 level as confirmation of a top, we were saved from either selling prematurely or from shorting prematurely. So instead, we get this week and a half of selling that ends up being just a pause in the action. Then we start this new leg up that runs from 1540 to over 1680. Now we break here again, and we don't have any clear indication that this break is going to set up a reversal, or whether we're going to rinse and repeat what we did back in the middle of April. So that just means we have to continue to watch. And a couple things I think we can watch is this rising yellow support line right here, that even though it broke momentarily back in the middle of April, I still think it's a fairly important feature in the chart. But also, we've got our 1600 line. I think this line is going to likely be an important level. I think if we come down to it, it would not surprise me one bit to see that set up a significant bounce. And the psychology of that is very simple. Everybody and their brother who does chart reading was looking at that line that's drawn over the 2000 and 2007 tops. When it failed to get over that line back on April, when was it, the 11th or whenever, when it failed to get over that, okay, well, next time it comes up, I'll sell. So people, well, actually the first time people sold, second time some people sold, then it gapped up over it, and we've been over it for the entire balance of the month of May. Once it got over it, we've stayed over it. So my feeling is this, is that people were probably surprised by this move over 1600. I was, to some degree. So now that we're over 1600, if we come back, I bet dollars to donuts that there will be a number of buyers who are licking their chops waiting for 1600 so they can jump on it. And I can't argue against that. I think that may be a good idea. So anyway, basically, to make a long story short and to keep this video from getting out of control like so many of them do, what we had today was a good, solid, and healthy back test of this broken support line. And I think that speaks well to the value of technical analysis. But we're not in a position to where we can say that necessarily that was a good spot to short. Now, if you were really short term and you're saying, you know, I'm looking to scalp just a few percent off the market here, or maybe in a 3x or 2x ETF or something like that, maybe that wouldn't be a bad play. But I wouldn't necessarily stick with that for long term. And the reason is simple, and that is this market has had a real penchant for coming back. And despite having broken support, just moving out to the right a bit, and then continuing the trek upwards. So, all of that to say is that there is no clear sense of direction. Normally, I would say expect maybe a reversal here, but where we are in this chart and the lack of any macro pattern just sort of has me saying, I can't tell you for sure if this is a short or whether you do what. I don't know. But let's do one thing. Let's draw a line right here. And use this maybe as a signal that indeed the S&P does want to stay to the right of this lower line, but continue to move upwards. So in other words, this could be one of those situations where we essentially change lanes. We were in the fast lane, now we're moving over to the slow lane, but we're still basically potentially headed in the same direction. So the good news is we still have some levels underneath us that we can watch. So I think this yellow line is probably the most important trend line on the chart right now, because it's been around for so long. I mean, here it is. If we go out to a daily chart and scoot it along just a little bit to fix it, we can see that this line has been on the chart since the middle of November. So it's pretty clear that this is important. We've had 1, 2, really 3, 4 touches on it, one little break underneath it, and now we're back above it. So I think if this line goes for the second time, that's almost certainly going to result in a move to test that 1600 level. But if we back out again on our daily chart, there's no chart pattern here. There's nothing that I see that says we've got a head and shoulders. Here we had a head and shoulders. We were on top of that. We had a head and shoulders with a triple top. We were on top of that. We were on top of this one back here in 2011. Right now, we're just trucking on up. So at some point, we'll get a pattern. The market almost always does that. But so far, just not there, not yet. So we got to stick with the trend lines. Thank you for taking time out of your day to watch this video. This is certainly getting interesting. Stick with it, will you, with me? And let's see what develops throughout the rest of this week and in the weeks coming up. And I would urge everyone, and I'm trying to do this now. I've been trying to do this ever since you've known me. Try to keep an open mind. You've got to keep an open mind. And I think you've got to exercise a little bit of discipline to say, okay, if we have a potential neckline or a potential trigger, wait for it. Don't try to act in too much anticipation. Now, I will tell you, and this is something I'll add in the notes too, I see a number of charts of individual stocks that are looking pretty bullish. So we may not be anywhere near a major top at this point. But if we see something develop, let's keep an open mind to it. Hey guys, thanks again for watching. Take care.